Hey, Cashflow Ninjas, real quick before we jump into today's episode. I've been asked by many people recently, what has been the one thing that has made all the difference on my journey as a business owner and investor? I started businesses and I've invested in businesses. I've invested in single family real estate, multifamily real estate. I still have a sizable portfolio of multifamily real estate, historic resorts, mobile home parks, oil and gas, life settlements, gold and silver, Bitcoin and cryptocurrencies. I could go on. But the one thing that has changed the financial trajectory for myself and my family has been infinite banking. Yes, you heard that correctly. That is the number one thing I've done over the past 2 decades that have made the single biggest difference. And it's not even close. Setting up and building out a family banking system using infinite banking has enabled me to create my own financial system. This year, it has allowed me to focus and not pay attention to all the chaos in the global economy and global financial markets. I really don't pay attention to all the noise about tariffs, trade wars, markets violently going down and then going back up, or interest rates skyrocketing and wrecking real estate deals and other alternative investment deals. Do not be beholden to other systems. Create your own system. If you're interested in working with me and my team at Producers Wealth to set up your own banking system or your own business and family banking system, then go to getwealthyforsure.com. That's getwealthyforsure.com. When you go to getwealthyforsure.com, you can request a free copy of my best-selling book, Get Wealthy for Sure. Only pay for shipping. You can also watch all of our presentations and schedule a call to explore infinite banking options with me and my team. You don't have to be powerless amidst the chaos. You too can have a financial strategy that provides certainty, predictability, and clarity. You and your family can also get wealthy for sure. Go to getwealthyforsure.com to start your journey today.
The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Lobsher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Lobsher. Thank you so much for joining me for another episode and spending the most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. Cashflowninja.com. We've got over 1,000 podcast episodes. There's 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the best newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Mike Morawski. He's got an incredible story as an entrepreneur and a real estate investor. Mike, it's great to see you.
Hey, good to be seen. How you doing today?
Doing great. I've been looking forward to this conversation. So for my listeners and my viewers that's not familiar with you and what your background, your journey, could you share a little bit about your journey and background with us?
Yeah, absolutely. So, been in real estate for over 30 years. Started out, I had a general contracting business in the northwest suburbs of Chicago, building about 25 room additions a year. Kind of burned out. As an entrepreneur, you know how you do everything. So your sales and marketing and contracts and ordering material and hiring, firing, bookkeeping, and still in the field banging nails. And I just burned out on it. And fortunately, I had somebody knocking at my door at the time to buy the company. So I was able to sell that company and thought I'd take some time off. But as an entrepreneur, we never take time off. So wound up buying a couple of two flats at the time and rehabbing those. And along the way, I met a real estate agent who at the time was extremely successful and decided I wanted to go in the real estate business. And he kind of coached me and trained me, mentored me on how to do the business. And he actually made me a cassette tape that I listened to over and over and over again. And I put that information in, absorbed it, became a sponge. My first 9 months in the business, I sold 78 houses and went on to build a team selling about 125 homes a year. And then from there, 2005, the market started to slow down. And I knew I wouldn't keep that production up. And I didn't really know what was going to happen in the market. But I had always wanted to go in the apartment business. When I was in the construction business, I'd done a lot of work for a couple of apartment syndicators. And I understood that you raise private equity, you marry it with a great real estate deal, you stay in the middle. As long as everything goes well, everybody makes money. And 2005, I did my first syndication, and over the next 30 months, I raised about $18 million. We bought 4,000 apartments in 5 markets. I built a property management company managing about 7,500 units. Had a company valued over $100 million with 100 employees working for us. And in 2008, we got crushed by the real estate cycle. Um, and during that time, I tried to save my company. So I had about 38 different companies at the time, and some were doing very poorly, some were doing really well. So I started taking money from companies that were doing well, moving it to companies that needed to be shored up, thinking that, hey, this is a recession. This is going to last 17 or 18 months. There'll be a 10 or 12% correction in the market. And when the markets bounce back, we'll put the money back. My accountant and my attorney both said it was okay to do that. Just leave a paper trail, which I did. And, one thing led to another, moved some money. This thing lasted 7 or 8 years. With a 45, 47% correction in the market, was a hard storm to weather. Ultimately, what I wound up getting in trouble for moving money, not for moving money, but for not telling my investors of the movement of money and not being totally transparent. We're in an industry that we're really called to be very transparent in. And I wound up being sentenced, or I got charged on wire fraud and mail fraud charges, and I got sentenced to 10 years in federal prison for non-disclosure. Now, I always tell people, and I don't know if you want to unpack any of that at this point, but there's a redemption piece that I want to talk about as well, because I always say it's not what happened to you, it's what happened for you. And I think that today I offer a gift to people that isn't readily available all the time.
Yeah, let's talk about that, because you bring up such a good perspective, or like scenario, or paint the picture rather, of around the 2008 2009 crisis, because I think you get a lot of podcasts and shows where it's just fluffy bunnies and rainbows and unicorns and
Right.
everything just goes straight up, right? It never comes down or corrects.
Yeah.
Markets just rocket, and you just make money every single time you invest in something, right? Of course, I'm saying this in jest. If you're listening to this, and I think this is good topic for conversation too, because when things get ugly, it gets very ugly. I remember, and I was very young and just starting my journey as an investor at that stage. Um, but I would say that I don't think anybody has seen anything if they've lived through a crash like that and an economy environment and actually be an investor in that. Because Mike, you probably saw, I mean, like, there were people at that stage. I don't, and people can't fathom this, because if you're listening to this probably too, a lot of people came into the alternative asset investing world and real estate investing world around 2012, right?
Yeah.
And you probably didn't lose a cent in anything. I mean, you could have been a monkey throwing, you know, darts at a board and hit home runs from 2012 to, like, I would almost say 2021,
Yep.
2022, round about there. But and I think a lot of people have gotten excited about this because they've only seen the good times, but the ugly times, the bad times,
Right.
it's really ugly. I remember, there were people, there were people in my network at that stage. There were divorces and suicides, and obviously you were in a situation where you actually went to federal prison. So there was all this stuff going on. So I think this is a very, very good thing to bring up, because I think people don't understand how ugly it can get.
Yeah.
So that's why risk management is so important, right?
Yeah, it really is. And so is transparency. Those two things are really important. And I always talk about 5 mistakes I made. I grew way too fast as a company. To scale $100 million company in 30 months, I mean, you got to grow slow and systematically. I was over leveraged. I owned $60 million worth of real estate at 85% loan to value, which is just crazy. I teach people in my coaching program today that you need to be at 65% or better LTV. I was undercapitalized as a business to operate my business. I had 100 employees figuring out how to make payroll every week. I didn't pay attention to the details. There was, though, in that decade, in that term, there was not the talk that there is today about asset management. And asset management is so critically important in what we do, and you can't take your eye off the ball. And that was one thing I did, was I took my eye off the ball. And then I didn't listen to people around me who were instrumental in my life, that I didn't pay attention to what they had to say. And I always tell people, I say, hey, I never flew private. I didn't have a boat. I didn't have a big house. I didn't have a fancy car. I was the neighborhood baseball coach. I was home most nights for dinner. And I got ripped from that to live in a 12 by 12 room with 3 men I didn't know, nor did I like, wondering what the hell happened in my life.
Yeah. So that was some time for the reflection right there, right? And how many years did you end up in there?
Yeah, just under 8. I was gone for just under 8. I always tell people, I say, hey, I went in, we were on iPhone 2. I came home, we were on iPhone 13. That's how long I was gone.
Well, you definitely kept your sense of humor. What were some of the other biggest learnings that you had down there? Because obviously, and how did you spend the time? It seems that you could spend it productive, or you could take a turn to negative town, if you will.
Yeah.
What was that like?
Yeah, so that's a great question. So that's what happened to me, right? That's the story of what happened to me. But the story could have ended there.
Yeah.
Listen, I went to prison. My wife divorced me. It crushed me. And I could have. There was a period of time that I wanted to kill myself, right?
Mm.
And I went in. I ran marathons years before, and I went to prison. I was 35 pounds overweight and hated myself. And one day I had a guy walk up to me, and he said, "Hey, don't let these people beat you, all they want to do is take from you everything you've ever known, everything, your family. But what they can't take is who you are and what you're made of. They can't take your brains, your smartness, what helped you to create that $100 million company. And it really made an impact in my life. I think we're all faced with defining moments in our life and choices at times. And I could have very easily pulled the covers over my head and said, that's it, my life is over. But whatever that guy said to me that day just changed the direction of my life. And he said, come to my class, start working out, you'll start to feel better, you'll start to lose weight, your clarity will come back. And I don't know why, but I said yes. And I did. I started going to his class. I started to lose weight. I started to feel better. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books while I was in prison, one on multifamily investing, one on property management. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. I was on an outreach program. I went in the community. I told my story to small business owners and local college students. I wrote a paper that got published in the Business Journal of Ethics that gets taught at the collegiate level today for forensic accounting and sales and marketing classes. And MC, I came home. I thought I was going to go in the coaching and training business and teach people how not to make the mistakes I made, which I did. And I have a great, coaching program. But what happened along the way was I found a deal and went to a couple of my coaching clients and said, hey, I think we should buy this multifamily asset. And we partnered on it. And my securities attorney wound up getting me approved by the SEC to go back and be an issuer of securities and a sponsor of deals again. So it's like my whole life has gone full force or comes full circle, And I tell people, and I tell my story today because I don't want people to be held in their own prison in their own mind from past failures or past addiction or past physical or sexual abuses or things that have happened in your past. You've got to move past that and get unstuck, and that's what I've chosen to do, right? And so that's I love the quote that says, it's not what happened to you, it's what happened for you.
Yeah. No, and I mean the comeback story is it's one heck of a story. And again, like you were saying, it's there's so many different ways that you could have gone about it, and to do that is quite remarkable because, again, a lot of people could have just at that stage crumbled and just given up, right? But that's just having some conversations with you. That's not in your DNA.
Right, for sure.
Yeah. So what a comeback story. So tell me a little bit about where do you live now, Mike?
I live in Huntington Beach, California.
Okay.
I'm originally from Chicago. I lived there forever. Always wanted to live by the beach, and a couple of years ago, finally made the decision to do that.
Awesome. And then, so tell me a little bit about, let's talk real estate, because that's the game that you're in. What's your view right now? If you just look from a macro perspective, what's going on in multifamily real estate? Because we've got a lot of people, obviously, that have invested in deals that have not worked out. So there's probably a lot of people listening to this that has been in that boat. What do you see? What's going on at a macro level?
Yeah. So what I could tell you is that there's no geniuses in this business. There's only market cycles. And this business is fueled by market cycles. 5 years ago, you could have not known anything, got in the business and looked like a genius over a couple of years, and then all of a sudden the market shifted, and that geniusness that you once had is gone. I believe we're at the bottom of the cycle. Cycles go up 8 to 10 years and they come down 8 to 10 years. And we are at the bottom of the cycle, getting ready to come out if we're not already coming out. When you start to look at some of the things in the market that are happening right now, GDP is up, unemployment is down, inflation's at 2%. There's going to be some moves, in the government. They're probably going to cycle Powell out of his position and put somebody in who's going to change interest rates. Trump just passed this big, beautiful bill, which is big. There's a lot of incentives in there, whether you are, in the real estate space, for tax credits, for tax benefits, for putting more cash in your pocket as a result of those. I've been in this business 30 years, and I can remember a number of times going, man, if I could just get involved before the media starts to say that the world changed. Because once the media starts to say, hey, everything has changed, it's too late. It's over. And now's the time to get involved. Whether you're a passive investor or an active investor, it's time to jump in and start looking at assets, buying assets, getting involved, because as we start to cycle up again, there's going to be a whole new portion of millionaires that are made.
What markets do you look at to invest in, and why?
Yeah, so we monitor about 40 submarkets right now. One thing I always say is we always look in red states because the landlord laws are a lot more friendly for property owners. I like markets like, Central Florida, Tampa to Orlando. I like Dallas, Texas. I like Northern Alabama, Tuscaloosa, Alabama. We like markets in Tennessee, Knoxville, Nashville. Tulsa, Oklahoma is a great market right now to be in. So Atlanta, Georgia. So, within a market, there's submarkets, and some are better than others. So you have to watch the submarket as much as you watch the big market, right? If you look at Tampa, Florida, there's 15 submarkets in Tampa.
Wow.
So,
Wow.
You got to know where you're investing. So we monitor those markets, and it's really interesting, MC. Right now we're underwriting deals again. We picked our pencils up, and deals are penciling where over the last several months they hadn't been, but now the numbers are starting to make sense. And once interest rates do come down, which I believe will happen late this year or early next year, we're going to see a lot of opportunity.
So you're saying you guys are looking at deals again. What does a good deal look like right now in some of those markets that you're looking at?
Yeah, a good deal for me looks like, what can I provide for my investors? So if I can achieve a upper teens return, call it 17, 16, 17, 18% for my investors, with a 7 to 10% cash on cash return along the way, that's what a good deal looks like for me today.
And then from a debt standpoint, how would you structure that? Because I think this is a lesson that a lot of people have learned in this cycle, this downside of the cycle, is that real estate is debt. So
yeah,
if your debt's not structured properly, nothing else matters, because interest rates go up, down, and sideways. When they were really, really low, I remember people saying, "Oh, it'll never go back up again." And I'm like, usually when you say that, you're tickling the tiger by the nose right there.
Yeah, I love that expression. That's great. Debt's got to be fixed rate. And I have a good friend who's in the business, and we have this conversation all the time: fixed rate, floating rate. I think there's a place for floating rate, especially if you're doing a quick in and out deal. But if you're holding something for a term, you need to have fixed rate debt. And I'm a fixed rate debt guy. Even if my debt is 6.5%, as long as it's below my cap rate and I'm in a positive yield position, those rates will come down. When they come down, I can always go refinance.
Are there a lot of deals in those markets just from folks that got caught on the opposite side of this interest rate spike that's becoming available?
Yeah, there's more and more. Last year we didn't see very many, and they were all overpriced when they came to the market. This year we're seeing a lot more opportunities. Some of the assets are not the best assets out there, but then there are quite a few that are better assets.
Gotcha. Gotcha. Well, and then also for folks just from a learning perspective, what are some of the biggest mistakes that some of those operators made that got caught on the wrong side of it? Obviously, the floating rate debt, but what are some of the other things that you're seeing of lessons learned,
Yeah,
of this?
floating rate debt, bridge debt, buy downs on your interest rates that you don't have the capital today to buy that interest rate down again. So interest rates went up on a lot of operators unexpectedly, where they couldn't resolve the issue. Um, Occupancy, not being able to get your improvements done in time in order to raise your rents to the threshold that you projected. I think too many people over projected rent growth in markets and weren't conservative enough. And today you need to be much more conservative.
Yeah. And very aggressive underwriting too, right? To make it attractive to raise basically. That's a lot of stuff that I saw too.
Yeah, absolutely. Absolutely. And I've always been a conservative guy. I'm the what if guy. I ask a lot of what if questions. What if interest rates do this? What if I can't do this with my rents? What if my capital improvements cost me more money? Can I put a stress test on my underwriting that answers those questions? And if the deal still performs under stress, then generally it's a decent opportunity.
What are you seeing with regards to disruption in the real estate market too, from technology and so forth? Because it's funny, it's a very slow moving kind of like industry and business, but there's been a lot of developments lately in technology and stuff. What are you seeing out there, especially in apartments?
Yeah, so a lot of the technology I'm looking at is enhancements for what we're doing. Just simple technology like, um, smart technology, where you've
Mm,
got, sensors on water lines, sensors on toilets, detecting leaks sooner, increase in utility bills. The technology today is more enhanced to be able to help an operator get ahead of any issues that might come up down the road. There's great technology that I've seen as far as for underwriting and for picking markets, and it's getting better. It's improving, so it's making jobs a little bit easier. Um, you know, and I'm still of the opinion that you have to do it the old school way, and you still have to check and make sure that everything balances, you know, with technology. So.
gotcha. Yeah, because that's a very very big part of it. What advice would you give to investors to maybe they've invested in one or two deals that have not gone properly? What advice would you give them to not get involved into future deals that could go potentially bad?
Yeah, don't overestimate what you can do in 5 years, um, or don't underestimate what you can do in 5 years, and don't overestimate what you can get done in a year. This goes back to your comment about, enhanced underwriting to make deals look better. Be conservative and ask a lot of questions of the deal and the operator to make sure that that deal was underwritten conservatively.
Gotcha. Um, we talk a lot about business on the show. We talk a lot about money, cash flow. We talk
Cash
about
flow.
all the fun stuff. You're on the cash flow ninja, yeah. But I always ask my first-time guests. We talk a lot about legacy, about living and leaving a legacy too. So I always ask my first-time guests, if you cannot leave any money to future generations, and you are only allowed to leave 3 principles and values to them to help them achieve happiness and success, what would they be?
Yeah, if you're leaving a legacy, for me, it's, I want people to remember that I never gave up, right? It's so easy, I think, in today's world to give up. And I want to, I want people to remember, don't give up. Stay the course. The other thing I would say is stay focused. I see too many people get distracted with shiny object syndrome, or the squirrel mentality. Here's a nut. Stay focused, stay the course, because anything that we do is a marathon. It's not a sprint. If you think you're going to go out, you might be able to make money overnight at something, but stay the course.
Yeah. No, those are extremely powerful, and you've done, incredible. Rebuilding your life, rebuilding your business, your brand, all that stuff, right? And again, that also doesn't happen overnight.
Right. It doesn't happen overnight.
Yeah. It's playing that long game. So, Mike, this has been incredible. Where can my listeners follow you? Where can they learn more about you, of all the things that you're involved with, real estate, coaching, and of course books? You've got some great books out there too. Where can they get connect and get in touch?
Well, thanks for asking, MC. First of all, my 3rd book came out. It's Multifamily Investment Secrets: Your Explosive Guide to Wealth in the Multifamily Business. Amazon bestseller 7 times. And, the reviews have been great. I appreciate the people that have read the book. But you can get a copy of this at multifamilyinvestmentsecrets.com. And if you want to follow me anywhere you hang out on social media, you can find me. LinkedIn. Reach out to me. I would love to connect with you. I love networking with people and talking to people. If I can add a little nugget to your life or add value in any way, I certainly would try and do that.
Awesome. Michael, this was fantastic. Appreciate you coming on the show and sharing your journey and your knowledge, and just providing so much value for all of my listeners and viewers.
Thanks, MC. I appreciate it.
And thank you to all of my listeners and my viewers for again spending your most valuable resource, your time, with me on the show today. Everything Cashflow Ninja is at cashflowninja.com. We've got over 1,000 podcast episodes, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You could subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.